What's good, YouTube? What's good, Power family? And welcome back to another video on the channel. In this video, I'm going to be covering how I caught this banger trade on US30 TP 2.79 on the trade. I wish I recorded it live. I didn't get to record the live session, but I'm going to break down the trades for you. The VIP was able to catch the trade idea, and somebody from the VIP asked me to make a breakdown video. That's why I'm specifically making this breakdown video. I possibly would have made it regardless because I want to help the masses, but somebody requested it, so I'm gonna do it specifically for y'all, bro. So I caught this super amazing trade, super clean setup on this trade, made roughly about 1480. So this is a challenge account, the 50K challenge account, and I risked about $500 on this trade, and I got like roughly a 3-to-1 risk reward ratio on it. It was a little bit off of a 3-to-1 risk reward ratio on it, but nonetheless, really good trade, really great setup. I'm happy people in the VIP was able to catch a trade. It happened really fast. I caught it really roughly around 9:27, 9:28, and within 5 minutes I got TP to hit. So really good start to the day. Hopefully you guys find value and knowledge from this video. Check the breakdown right now. So this is going to be a nice in-depth breakdown of how I caught this trade. I'm not gonna miss a detail. I'm gonna cover every single aspect of how I caught this trade, and hopefully you guys learn something. So we always start from the 1 hour time frame. That's the time frame I always start from, no matter what. I always start from the 1 hour time frame. I'm going to use the bar replay tool to go right back right before we started trading in the market. So this is around 7 o'clock, right before 8 o'clock, right before 9 o'clock. So that's when I get on the charts, when I start looking for trades around 8:45, 9 o'clock. All right, so let's mark up the areas of interest on the 1 hour with the purple box. So this high right here, as you can see, I always mark off the wicks of the highs and the lows. This is something that I cover very strenuously. If you really want to understand why I use the wicks, just watch the channels, the videos in my WAP, or go to my other previous YouTube videos. I have multiple explanations of why I do this. It's just you looking for the information. It's really there. It's low right here, and let's mark up one more low. So I like to mark up 2 lows and 2 highs above price. So 2 above, this is price right here. So 2 above price, this is 1, this is 2, and 2 below price, this is 1, this is 2. Sometimes I mark up 3. It just depends. It really just depends on the day, depends on the setup, it depends on if I need more areas of interest, like more confluences, but usually 2 above, 2 below. So on the 1 hour, I think I covered all my areas. I definitely did. This is exactly how my charts look like before. Now let's drop down to the 15 minute, and this is only 3 time frames that I use. I use the 1 hour, the 15 minute, and the 1 minute for the entries. That's literally it. I don't use nothing else. That's the only time frames that I use. So on the 15 minute, we're gonna draw up our areas of interest with orange, color orange. So I like this area of interest, I like this area of interest, and I like this area of interest. Personally, I don't see any more areas of interest that I found valuable on the 15 minute. Honestly, I see this area right here, but it's already covered in the 1 hour area of interest, so I don't need to draw it again because it's already covered. So I only seen these areas of interest, so that's all I was really paying attention to. From here, we drop down to the 1 minute time frame because we're looking for structure. We're looking for the break of structure, and then we'll get in off the break of structure. So as we can see on the higher time frame, we're already in an area of interest. So right now it's really just looking for how we can capitalize off this area of interest by dropping down to the 1 minute. So now on the 1 minute, what am I looking for? Looking for structure. So I'm going to fast forward a little bit to show you guys what structure I was paying attention to. This structure right here. So I was looking for this structure to pay attention to. I also noticed that these lows right here was a previous structure. As you can see, price came from this area of interest. It went up, created structure, it broke structure, then it created bearish structure again. So I was looking for the break of this low to initiate my buys, of this area of interest. That's really what I was looking for, and I knew it was 9:30. So usually 9:30 setups, 9:30 trades really move with volume. It moves very fast. It has a lot of volatility because that's the opening bell. And I like to catch trades off the 930. I'm very risky as far as 930 comes, because I like to either be right really quickly or right or wrong very quickly. I don't like to be in the middle for too long. So let's fast forward a little bit more. So now we got the break instruction. I'm already looking at this area as an area to buy from. So boom, let's draw up the area. Let's draw up where I would get in. So this would be my entry. This would be my stop loss. And my take profit is all the way up here. I've seen that I can easily hit like a TP4, but I didn't want to be greedy, so I was looking for a TP3. I'm going to show you why I didn't get the full TP3 and I took it a little bit sooner. Let's see if the next candle went lower. The candle went a little lower. So all you do is really just readjust. Just readjust your stop loss. That's it. Because you're not in the trade yet. So you still have the room, the possibility to readjust the stop loss because you're not in the trade yet. Once you're in the trade, don't readjust the stop loss unless you're bringing stop loss closer, because your take profits are getting hit. So if you're at like TP1, you might want to close the amount of risk that you have. Maybe you want to put it to break even, and you may want to half the amount of risk. Like if you was risking 500 and hit TP1, so that means you was risking 500 for 500, and now you're up 500. So now you're putting your risk at 250. So if it comes back, you're only losing $250. Or you could just put it straight at break even. So if it comes back, you're net zero, or you're up just a little bit for the day. That's how I like to do it, because I want to protect my downside while keeping my upside as high as I can possibly get. So this time is 9:25. 9:26, 9:27. So I got into this trade at 9:27. That's when I got tapped in, and I told you I was risking about $500. I was looking for TP3. Should have recorded this trade. I'm really mad at myself. I didn't record this trade, but it's fine. So in just 1 minute, I already got TP1 to get hit. So in the first minute, I already moved my stop loss to half. So I didn't want to take full size risk. So the next minute it pulled back, and then next minute later, so 9:30, by 9:30 we already pushed above. And at this point I put my stop loss to break even, because I'm already up 1 to 1.5 my risk. So at this point I was risking 500 and I was already up 750, 800. So I'm not gonna let all that 750, 800 come back down and make me down $250. That makes no sense for me. I'm gonna put my stop loss at break even and then keep trading or keep holding the trade onto the intended target. So boom, in literally 1, 2, 3, 4, 5 minutes, I doubled whatever I was risking. I got TP2, so I was risking 500. I already made $1,000 in just 5 minutes, and that's really the power of trading, and that's really my strategy in a nutshell. I kept holding on to this because I was looking for TP3. And honestly, I wasn't scared or anything. At this point that it hit TP2, I already moved my stop loss to roughly around here. So I already secured around 400, 500. So even if this trade turned against me, I was still up. I would still be in profit. I would still be walking away with something. And that's really what it is protecting the downside, protecting your profits, making sure you lock in something. Because you take what the market gives you. The market, it's not the other way around. You take what the market gives you. The market doesn't take what you give it. Understand? So whatever the market gives you, figure out a way how you can capitalize off it. If you can lower your risk, if you take a contract off, if you can minimize, take something off the top. If you are up $1,000, just put your stop loss in positive 200, positive 400, whatever. So even if it does come back, you're still up positive 400. That's personally for me, that's what worked for me in the past few months to a year or years. That's how I've been primarily trading. So let's fast forward one more. So you see in the next minute, we got almost to TP and it came back. So I'm already looking at this high right here as the last point that price wanted to go to, but it struggled. So at this point right here, I wasn't willing to, seeing that the candle closed like this. If you look at the one minute candle, the candle closed like this. So I'm like, all right, cool. At this point, I already secured $500 or 400 something. I'm already up 1200 at this point, 1100. So if price goes back up here, which is 1400, I'm going to take it. Why? Because this is the last point that price struggled at. And I already know that based on wicks, this is how the highest that price has gone, and this is the highest that price may go for the next few minutes to hours or whatever cases. So that was my intended target. We had a nice little pullback, and then we had a nice continuation back into the highs. The next candle, it ran right above the highs. I took it right there. So it closed out at 1,400 something. Let me show you guys what it looked like right now. So $1,461 is what the profit was made on the account. I'm currently back in profit on the account, $600. I was down on the account the last 2 days, which was Monday and Tuesday. I took 2 losses. It was equal up to negative 850 or something like that. And in one trade, I made all of that back and some more, because the risk reward ratio is really nice on this trade and I executed well. Hopefully you guys learned something from this video. Till next time, peace out.